Hello. Good morning, good day, good evening, depending on the time you're catching this broadcast. It's your boy Pedro again. Um, Here again to give you an update as to what's happening in the market, and to give you a sort of a weekend review as I've always been doing. So today's this thing is going to be centered around. It's been a crazy week so far, so good for the market, and I've I've just observed three signs that could send the market into a proper downtrend if the bulls need to. If these three signs are not well defended by the bulls, to save their skin, we could see prices. These are warning signs. We're not yet there, but these are warning signs you should be looking out for if you are concerned about the market. These are signs that should not be overlooked. So, first of all, I'm going to show you our. First of all, okay. No, first of all, I'll show you. I'll show you. I'll go back to our channel, just which I drew last week. An update on our channel. Our channel is still in place. It's still working out perfectly. Here's the daily time frame. As you can see, prices are still within this channel, closing inside this channel. Well, the channel is still working out perfectly, still going downwards. Right inside is still swimming inside the 30K region. So still going deeper and deeper into the 30K region, but yet to close below or above on a daily closing basis. I will drill down to the 4 hour chart so you can take a look as well. So it's still holding on the 4 hour chart. There was a close on Friday below it, and an immediate close back into it. The bulls were able to defend it with this huge bullish engulfing candle, something we've not seen in a very long time. So that's to tell you that the bulls are fighting so hard to try and defend the territory, 30K territory. And since then, prices have remained inside the channel, closed inside the channel. Prices have not failed to close below the channel ever since. It's been playing out perfectly, as you can see. I'll drill down one more time to 1 hour chart, and you can see that yes, also even on the 1 hour chart, prices have failed to close below the channel ever since the Friday close, which we just saw on a 1 hour chart, a 4 hour chart. There was a close on Friday, the close, but you can see here the 4 hour bullish engulfing is also shown here, represented here on the 1 hour chart, a very big bullish engulfing candle that sent back prices into the channel, and then it stayed that way right inside the channel so far. So the channel has been playing out so perfectly. Bulls have been able to take prices up to the 32K region, which is the top of the 30K region, and then prices have gone back to the base, and we're bouncing back from the base again. So our channel is still in place. So that is good news for the bulls, that the channel is still in place. It has not been broken yet, but it's still very much under attack, very much under threat. So that is not too good for the bulls, which is definitely going to be the case anyway. So I'll be diving straight to the three signs that you need to watch out for if you're in the market, especially if you have a bullish sentiment. You need to watch out for these three signs because the market, these are signs that people tend to ignore, but these are signs that should not be ignored. These are signs that should be should be taken into consideration. So far so good. The first sign is the fact that this channel, this descending channel, to go back to the 1 hour time, the daily time frame, so you can take a look. The first sign is this: the fact that the consolidation, which was originally between the 30 and the 42k region, has failed to continue in like manner. That but has now shifted down to the 35k region, 30 to 35k region. It's a first sign. The bulls being unable to take prices back up to the 42k region is not a good sign for them as well at all. That is the first sign of first sign of this of the first bad sign for the bulls, for the market. Prices not being able to go back, but staying closer to the base of the consolidation, which is the 30k region. Is not a good first sign for the bulls, for the market. So, and as a result of this, we can see that this channel has been formed. Channel has been formed. So the formation of this channel is to facing downwards, and then you can see that since this channel was formed, which is exactly is 2 weeks. Let's say since the beginning of this month, uh, we've had this downward pressure, which was initially defended by the bulls, but since the 8th, which is close to almost 2 weeks now, the bulls lost the higher low formations, and then lower low formations started to take place, and then that means that they're unable to defend in like manner. That equilibrium triangle we're able to get before has not been the case. So this descending channel is not a good sign. That this descending channel means that prices are unable to go back up, rather they are tending towards the floor. So that is not a good sign as well for the bulls. So it's also a sign you should be looking out for. Another sign that is not good for the bulls is the fact that let's go upward to the weekly time frame. You can see on the weekly time frame, we have a weekly close below the 50 EMA. That is not good for the bulls. These are signs you should be looking out for. These were signs that were ignored when before the May 19th crash on the daily time frame. And the people kept because of their bullish sentiment and all that, bullish bias about the market, and then getting carried away. We're all getting carried away by the all season and all that, and then boom, this happened. That happened on the May 19th and took us on all unaware. So, in as much as you want to consistently stay with your bullish sentiment, you should be aware that, man, these things don't just happen. Most times these things don't just happen at once. They give you signs, they give you clear signs, they give you warning signs before an eventual crash. So I'm not saying things are going to go south. Anything can still happen because we're still at the base. It's even risky to try to sell at the base at key support. But just bear in mind that these are warning signs. If these signs continue to drag drag the market down, and then bulls are unable to defend these signs, then hell may be let loose on the markets one day. So the market closing below 50 EMA on a weekly time frame, which is a big time frame, is not good for the market. It's not good for the market. Um, Another sign is the fact that okay, another sign is I'm going to be using I'm going to be using the Bollinger Bands to show you that the prices are currently approaching the neckline of Bollinger Band 5 and 2. That is not, it is also a sign you should be looking out for as well. I'll be going down to the Bollinger Band so you can take a look, so we can see it together. So Bollinger Bands. Just a second. God, what's happening? Bollinger Band. Sorry, it's a bit slow. Okay. Okay, so I'm going to be setting it to 5 and 20. 5 moving day average. Move 5 moving 5-day moving average. So you can take a look. So let's go to the weekly time frame. Why is it so slow? Great. So this is the neckline. This is the neck of the Bollinger Band. I don't know if this is very good. So someone just pointed out to me yesterday. I don't normally use this, but someone who's good, an expert in Bollinger Band, just pointed this out to me as well. That the price, the if prices close below this neck, which is the lower band of the Bollinger Band, that this is not a good sign. It's not a good sign, and currently price on a weekly, and especially happening on a big time frame like the weekly time frame, it's not good. So prices are currently sitting on the neck of the lower Bollinger Band, and if prices happen to close below this, I'm being told that that is also not a good sign. So these three signs are signs that we should be looking at for market. So this is basically summary of what's happening in the markets, or what has happened in the market in the last week. The bulls are getting weaker, the bears are getting stronger. Hence this descending channel. You can see even on the weekly time frame, it has been very, very obvious. Like it's playing out well even from the weekly time frame. You can see prices unable to get back to the 42K region. So these are not good signs for the market. So the bulls have a hell of a job to try and defend this. For them to defend this successfully, they need to they need to break above this channel, this channel. They need to break above the channel and then take out the 35K region for them to regain back control. Because as you can see, prices heading down, even if they head back up to the top of this descending channel, It simply means that if they are unable to close above it and defend the defend the territory at the top of the descending channel, it simply means that it's just a pullback. Prices would have to go back down again and then form a new lower low. So the Bulls have a hell of a job. But the good thing is, well, one thing is closing below the 50 MA is one sign, but the second thing is they need to ensure that they stay within this 30K region because they've closed below the 50 MA on a weekly basis, but they are still within the 30K region. So that is one good sign for them, but that's not good enough. They need to be able to prove that they are ready to still stay in the game by shooting up, breaking through the descending channel and then the 35K region and possibly back to the 42K region. So one first sign is has been one first sign is breaking below the 50 EMA. So the second sign, which would finally um, kill off any hope for the bulls, would be a break below the 30K region. So the horizontal level is, you can see a ton of confluence around this region, which is a 50 EMA happening to be around the region. It is 50 EMA is around 33.7. So they've broken below it and then they are into the 30K region. So if they finally break below this 30K region, then if they close below the 30K region on at least a daily basis, then that would be a bad sign for the bulls. The bulls would have at that point finally lost the battle to the bears. So that would be a continuation of the downtrend, the proper for Bitcoin, and then proper downtrend for the entire market. So the bulls have a hell of a job to do to keep to save their skin in the market. So these are signs you should look out for. Many people won't tell you this. Everyone in the market has bullish sentiment. So we're all blinded by our sentiment, but we need to tell ourselves the truth. The market is currently on fire, currently under heavy attack, and then the signs are so glaring at the moment. They are not good at all for the market. So watch out for these signs. If you are a player in the market, watch out for these signs and be prepared. Ready your arsenal. If you're a guy who's ready to short the market, ready your arsenal. If you have positions and you feel like yeah, close to break even or you're already in profit, make sure you try to close your position because and be ready. You should just make yourself ready for a venture that prices go south. That is this proper downtrend. So thank you very much. This is all from me. This is all I have for you today, and we're very happy to hear your thoughts and the comments. And feel free to subscribe and share the video, and let me know what you think in the comment section. And always remember that this information is not to be treated as financial advice, but should be but for educational, but as an educational video. Remember that forex, crypto, or any asset trading is a risky endeavor. Endeavor to carry out your own research before delving into any trade. Thank you very much. I wish you a lovely trading week ahead. God bless you all. Bye bye.